what happens is when these things go to sleep, when they wake up, there's a mega move. And so that's the question, is which way is it going to go? The Fed may raise 75 basis points and then pause. And the market just loves that because it's the first hint that the Fed is wavering. And what I'm concerned about is after the midterms, how does the economy look and how do things start to slide? So you have to think about it like this, is we're entering this unprecedented period where investors, remember, think about how many new investors came into the market over the last 5 years or so. They've never experienced a prolonged bear market. So it's going to be one that tests their kind of ability to just stay with the trade, stay with the investments in light of all the negativity that they're going to hear about an economy that is going to be stuck in a recession for potentially a long period of time. For me, I'm still going to go into 2023 still thinking it's going to be the best performing asset. My big thing is we get these regulations out, at least we know, and I think money will start to flow in, big money.
Gareth Soloway, a professional trader and macroeconomic analyst, has been unraveling major asset investment trends for years. In this Essential Investing highlight, Gareth provides his suggestions of what he believes is the best assets to invest in 2023.
Let's start with Bitcoin, okay? Because you've made very famous and just spot-on calls with this crypto, which you say basically is a sleeping beauty right now.
Yes.
Right? It's asleep.
Yes, it is. Absolutely, it is, and I think that's partly due to you have some consolidation going on because you have people buying for currency issues. We know the dollar has been ripping higher and crushing a lot of currencies, so that's giving it a little bit of a bid. And then you also have sellers that are still unsure about it. There's lack of regulation. There's lack of clarity, and so it's kind of this midpoint. And when you get a sleeping chart, it basically means buyers and sellers are equaling themselves, right? They're equaling each other out, and that's keeping price in a really, really tight zone, essentially. You have the stock market way wilder than crypto.
Absolutely.
You have currency markets, which almost never happens, wilder. Bond markets wilder. And here you have crypto just going nowhere. But what happens is when these things go to sleep, when they wake up, there's a mega move. And so that's the question, is which way is it going to go?
Mega, that it would beat its all-time high, mega?
Not that mega yet.
Okay.
Eventually, yes, I do have that long-term thought process. But I think in the near term, I'm looking for actually a move up, probably to 25,000, which from here would be a nice chunk of change. But eventually, reality is going to set back in, and I still, unfortunately, don't think the lows are in yet. I just think that we're going to get to this really risk-adverse period. And you might think right now is risk-adverse, but S&P down 20% to me isn't risk-adverse when you look at 2009 or even 2020. So S&P right now into the midterms, we've talked about how you likely get this little bit of a bid.
Yeah.
We saw the Wall Street Journal article that just came out, I think it was last Friday, talking about how the Fed may raise 75 basis points and then pause. And the market just loves that because it's the first hint that the Fed is wavering. We've seen housing data. That was very, very weak. The markets love that. The dollar started to come in. So all the things are working for the market to lift into the midterms. And then what I'm concerned about is after the midterms, how does the economy look and how do things start to slide? So I think in the near term, VIX is going to head lower. But I think the VIX still has a long upside move in 2023. And so you have to think about it like this, is we're entering this unprecedented period where investors, remember, think about how many new investors came into the market over the last 5 years or so. They've never experienced a prolonged bear market. So it's going to be one that tests their kind of ability to just stay with the trade, stay with the investments in light of all the negativity that they're going to hear about an economy that is going to be stuck in a recession for potentially a long period of time. And I've gone on record, and I said it yesterday in the speech, that I think we don't see new all-time highs for 10 years in the S&P.
Let's talk about the Federal Reserve.
I think honestly they're going even a little too far, and I've said that before.
Yeah,
that
you have.
They're front loading this because they're reacting instead of kind of foreshadowing or kind of looking ahead. And they're reacting to the fact that they were late, they were wrong on transitory and all these things, and so they're overcompensating. And I really worry that at some point the consumer's going to run out of money. We paid, so many people paid down their credit cards and everything. Now they're starting to build that back up. When that stops and they don't have that money anymore, the economy's going to take a big dive. Yeah, so there's always really good opportunities out there in bull and bear markets. And so something like Meta makes sense to me. Everyone's hating on it. Everyone's saying, they're spending too much money on the metaverse. And so what that does is it creates this negative kind of vibe going into their earnings coming up. And just overall, people's expectations are so low. And we've seen price come down, I think 65% off of its highs. So something like that where it's now trading at a forward PE of 10, it makes sense in this type of environment. And expectations are just so low.
What do you do with Apple?
Apple, I still think is overvalued. I do.
Okay.
I look historically, right? So think about this, right? You go back in any other period in time, a stock like Apple was always trading at like a 10 or 12 PE ratio. It's still north of 20. So I know people are just diehard iPhone people, but
Okay.
so Netflix has had a monster move, number one, right? I mean, from $160 now to $280 or so. So I mean, that's a huge move up. But remember when it was down at the lows, everyone was writing it off. Oh,
Yeah.
Netflix content
Yeah.
stinks.
Yeah,
everything.
yeah.
That's what people need to look for. If you're an investor out there, you need to look for quality names that everyone's now turned super negative on, and price has then gotten crushed because of it. So at this point, I'm not buying Netflix because it's rallied way too much, but I am looking at names like Discovery, the HBO Max combination, as well as Paramount, because those are still trading at very low valuations.
We're obviously at this conference where gold is a huge conversation piece. At the start of the year, it was your pick to be the best performing asset. We're about to enter November. Gareth, have your thoughts changed at all?
That's a good question. So far I've been right. It's been the best performing.
Yes.
In terms of dollars, it's still down on the year,
Yes.
but just a little bit. But for me, I'm still going to go into 2023 still thinking it's going to be the best performing asset. All right, now this one's harder because Bitcoin is close to the lows.
Right.
And a simple bounce on Bitcoin could be 30%, which is hard for gold to do. But I still think Bitcoin will head down towards 12, 13, maybe sub 10. And I think gold is getting close to its meteoric run.
What do you do with the miners?
Yeah, so I'd stay away from the juniors right now and go to the quality names like the Newmont Minings.
Yeah.
But I do think as inflation comes down, those are going to be the ones to pick it up. As gold goes up, you're going to see those really rebound. Because if you look at the miners, they've been cut almost in half, a lot of them. And so there's a lot of value if inflation comes down. Because remember that the miners got crushed not only because gold wasn't going up that much, but inflation, all their input costs were going sky high. Mining costs aren't going to come down. They're just going to stop going up further and further.
Fair
and I
enough.
just want to make sure they can survive. So I do like Cardano right now. I do like a little bit of Solana short term, Avalanche, Ethereum, Bitcoin. I think all of those in the near term are quality, and I think you'll get a pop. But I do worry about the longer term. I think if you're a long-term investor, you focus on best of breed, which is Bitcoin and Ethereum. I think the big hover right now is this regulation, right? And it's keeping so much money on the sidelines. I mean, pension funds, hedge funds, all these people, I do believe they want to invest. They see the light of Bitcoin and what it can do to the system and how it can improve things. But there's just like, well, what's the rules? And remember, they all have these fiduciary responsibilities to their clients where they can't be like, oh, let's just invest some anyways and hope for the best. Without knowing the rules, they can't do it. And so my big thing is we get these regulations out, at least we know, and I think money will start to flow in, big money.
All right.
I'd recommend you take a look at this video, where Patrick Bet-David shows us his research that without a doubt points us to the fact that we are about to enter a worse real estate market crash than 2008.